You've probably felt it, right? Suddenly, it seems like everyone is talking about the stock market. Your friends, people at work, everyone's got a tip or a story about their latest trade. And you know what? It's not just a feeling. Millions and millions of new investors have jumped into the Indian stock market, mostly using just their smartphones. But with this massive boom, what's really going on? Let's take a look. Just to give you an idea of how big this is, look at this number. From 2019 to 2023, the number of individual day traders in the cash market went up by 4.6 times. We're talking about a jump from about 1.5 million people to nearly 7 million. That's not just growth, that is an absolute explosion. So, okay, a ton of people are trading, but here's the real question, the one that really matters. Are they actually winning? Are they making money? With this many new players, you'd think there would be success stories everywhere. But what if the reality is a little different? In this explainer, we're going to dive into the hard data and see what's actually happening. Okay, so before we get to the results, we first have to ask, who are these new traders? Because let me tell you, the profile of the average trader today looks nothing like it did just a few years ago. First up, let's talk about age. This is just wow. Back in 2019, folks under 30 made up only about 18% of day traders. Pretty small slice of the pie. Fast forward to today, they make up almost half of all traders, 48%. It's basically a whole new generation taking over the markets. And it's not just their age that's different. It's the amount of money they're trading with. The share of what the data calls very small traders, that's people with an annual turnover under 50,000 rupees, has more than doubled. They've gone from about a quarter of the market to being the majority. So we've got younger traders, and they're trading with smaller amounts of money. And check this out. It's not just happening in the big metro cities anymore. Sure, Tier 1 cities saw growth, but look at the smaller towns. A 5-fold increase in Tier 2 cities and an incredible 10-fold increase in Tier 3 cities. The stock market isn't some exclusive club anymore. It's everywhere. All right, so now we have a really clear picture of who these new traders are. Young, trading with less capital, and coming from all over the country. Now for the main event. How are they actually doing? We're going to start with the equity cash market, because that's where most people get their start. And, well, this is where the dream kind of hits a wall. A huge 71% of individual day traders lost money. Let that number sink in. That means for every 10 people day trading, 7 of them ended the year in the red. Not exactly the get-rich-quick story many were hoping for. So you might be wondering, what's the difference between the small group that made money and the huge group that didn't? Well, the data shows something really interesting about how often they traded. The winners, they averaged about 51 trades a year. But the people who lost money, they were way more active, averaging 72 trades. So trading more didn't help. In fact, it seems to have hurt. And here's something a lot of people forget. Trading isn't free. Every single trade has costs, fees, taxes, you name it, and they add up. For the few who actually made a profit, these costs ate up almost 20% of their winnings. Ouch! But for the people already losing money, it's even worse. These costs added another 57% on top of their trading losses. It's like digging a hole and then having someone dump more dirt on you. Now, if you thought the numbers from the cash market were tough, just wait. We're about to enter the high-stakes world of derivatives. This is where the risks get bigger, the pace gets faster, and unfortunately for most people, the losses get a whole lot worse. So what are derivatives anyway? Put simply, they're financial contracts that let you bet on where a stock's price is going to go without actually owning the stock. The big appeal and the big danger is something called leverage. Think of it like a financial magnifying glass. It can turn a small gain into a huge one, which sounds great, but it does the exact same thing to losses, turning a small mistake into a total catastrophe. And the results are just staggering, honestly. If that 71% loss rate in the cash market was a red flag, this is a full-blown siren. A mind-boggling 91% of individual traders in derivatives lost money. Let me say that again. 9 out of every 10 people who traded in this market lost. And we're not talking about small amounts of money either. The scale of these losses is almost hard to comprehend. The total net loss for individual traders shot up by 41% in just 1 year. It went from around 75,000 crore rupees to over 1 lakh crore rupees. That is an unbelievable amount of money just gone from people's accounts. Okay, we've seen a lot of numbers, a lot of charts. So let's step back for a second and put all the pieces together. What is the big story that all this data is telling us?
So here's the bottom line. Yes, there's a huge, exciting boom in market participation. We have more people, especially young people from smaller towns, getting into trading than ever before. But here's the harsh reality check. The vast, vast majority of them are losing money. It seems like trading too often, underestimating costs, and getting drawn into the high-risk game of derivatives is a recipe for disaster for most.
And that brings us to the big final question we have to ask ourselves. We have this amazing technology that makes trading stocks as easy as ordering food. But is our financial knowledge keeping up with our apps? The data seems to suggest a pretty scary gap between how easy it is to trade and how much people actually understand about the risks. And that's a problem we really need to think about.